Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now today we're joined by Chad Griffiths. Now for once, I had no trouble with the name. Usually I have to ask people how you pronounce your name or whatever, but today it was a nice, easy one. It was a fellow Griffiths. So Chad, thank you so much for being on the show and thank you for making the time.
Yeah, thanks so much for having me on here, Barry. And likewise, I don't get to meet many Griffiths either, so it's a true honor.
Yeah. I'm sure we're related somewhere down the line or somewhere in our past. So it's not to be here with family, right? Because we're
absolutely.
Well, do you want to give the listeners a quick insight into sort of your past, into what you've been doing in real estate and what you're currently up to in real estate?
Yeah, thanks for that. So I started in the business in 2004. I'd gone through college. I dropped out of college. I was working at a restaurant. Didn't really find much of what I was enjoying. So I got into real estate. 2004. I started in residential. Actually, I did a year of that. Quickly realized that it just wasn't for me. I didn't want to be spending evenings and weekends away from friends and family. So I transitioned to commercial real estate in 2005. And as it happened, the brokerage that I ended up joining was predominantly focused on industrial real estate. So I thought I was going to be selling office buildings or, working in like big glamorous commercial real estate. And as it turned out, I started working in warehouses. So the phrase that a lot of people call industrial guys are dirty booters, because we're always walking through construction sites or dirty industrial properties. But I'm very grateful that I did accidentally stumble into it, because it's been a very rewarding career and I truly just love doing industrial real estate on a day-to-day basis. And then in 2014, I also started investing in it. So I've bought a handful of properties now myself. I've got partners in them as well. But so I do day-to-day brokerage, selling and leasing industrial real estate on behalf of clients. And then I also have my own portfolio that I manage.
Very cool. So you're the perfect person to talk about industrial today, because I think this is going to be a two-part interview and it's going to be, solely focused on the industrial side of stuff. And I guess what better place to start than what is industrial, right? You mentioned it there when you started. You thought you were going to be in these fancy buildings and doing this, and that wasn't necessarily the case. And I think, the word industrial, you hear it all the time, but you might not really fully understand what it means. Can you give us sort of a high level of what industrial investments is?
Yeah, and that's such a great place to start, because you're right. Most people have some vague idea of what industrial real estate is. And admittedly, when I started as well, I didn't fully understand what it was. So my knowledge in 2005, when I got into it, was probably the same as like the average person right now, where, you've seen a warehouse. I always use the example actually of like a Costco or a Home Depot. Those are essentially just large warehouses, but they're situated in retail locations and there's large parking lots, but those really are just a large warehouse. So everybody has somewhat of a vague idea of what industrial real estate is, but it also goes so much beyond what most people think of when they bring up that idea of industrial real estate, because you can have big manufacturing properties. One that I always point to is the Boeing factory just outside of Seattle, Washington. It's a 4 million square foot facility. If you could wrap your head around that, like we go through a house that might be like 2,000 square feet, or you might go through a Costco or a Walmart, which is 150,000 square feet. The Boeing factory is 4 million square feet. And the whole purpose of that is all the raw materials come in, it's assembled, it's made into airplanes, and then the airplanes get sent out as a final product. That's like on the one far end of the scale for manufacturing properties, but there's also all the other industrial properties geared for manufacturing that make everything you could think of. The hat that you're wearing, our microphones, our clothing, those are all made in some manufacturing facility. And quite often those are going to be tucked away deep in an industrial park. So the average public just doesn't see these because they're not driving through industrial parks all the time. But once you start getting into an industrial park, you start seeing all these companies that you never even thought of that are catered towards that manufacturing side. Then the one that probably has become more familiar with a lot of people is just warehousing. And I'm sure you've got a big Amazon fulfillment center in your market. We've got a one that's 1 million square feet that just went up in our market. They're working on another 2.5 million square foot facility. And the intent with a warehousing property is things come into it, those things are stored or worked on for anywhere from like an hour to months or even years, then those things just get shipped out. So warehousing is big business now. When you hear industrial real estate in the news, chances are that's going to be referring to e-commerce, these big box distribution centers. Some of these are approaching 2-3 million square feet themselves. So they're almost as big as that Boeing factory. And that's really what a lot of people are more familiar with now because they're on major highways. Amazon strategically locates close to where people's houses are so they can quickly get product from the warehouse to their homes. So you start seeing these in major roads all over now. And then the third category would be flex properties. And flex industrial properties is kind of a catch-all. So it's everything that isn't neatly defined as a manufacturing property or a warehouse. And the example I use quite often is a car dealership. Chances are there's a little showroom at the front where they have all their cars. Then they're going to have some office space, and in the back is they're going to have their garage where they work on all their vehicles. And again, that's usually in a retail location, but that's an industrial building because there's a big warehouse at the back where they can work on their cars. So those would be like the three main categories: the warehousing or distribution centers, manufacturing being the second, and flex properties being the third.
That's really interesting. Essentially, it touches every part of our lives, right? And you don't think about it, right? You get a package from Amazon. You don't think too much about where it came. You go to pick out a brand new car, or you go buy a car. You don't think too much about where that car dealership is located, right? But it touches every part of our lives, and it's such an integral part of it. And it seems that that's why industrial has been such a strong investment, such a strong investment category, right? But maybe can you elaborate a little bit on that? Why it is such a good investment? Maybe talk a little bit about the demographics and the current trends that kind of affect that and make it such a strong investment class.
Yeah, and I love that point about Amazon and how like everything that we touch and have in our daily lives has gone through a warehouse. I would even extend that and just looking at the supply chain as a whole. A product, and maybe we could just even use like the microphones that we have right now. These microphones have actually probably been through a handful of warehouses from the supply chain, going all the way from where they were made. They would have been in one industrial property when they were made. Then they're probably sent out if these were made in China. Maybe you've got a better one than mine, but I think mine was made in China. So it came from a warehouse in China, then it got shipped overseas. Then it was probably in a temporary warehouse as it was repackaged with other goods. Then it was probably sent to the manufacturer who made it. Then it was probably in that warehouse for a bit. Then it was probably sent to a distribution center like Amazon's, and then it probably came to my house. And so you think of all the different layers of industrial real estate that were instrumental in that process. You start seeing that not only does industrial real estate touch everything, or should I say everything touches industrial real estate, is that you need to have industrial real estate in that supply chain for it to be effective. There's just no way that you can get goods shipped from anywhere. And even if we were just to say in North America, if there is something made in Florida and it was sent to me, that's still going to be in a few different warehouses because it just has to be made, it has to be stored, it has to be shipped, and then it has to be consolidated in one place. So the economy really needs industrial real estate to function. And I think that's lost on a lot of people. We all see that, you need an office space because people need to work, or at least they did before we ran into this situation last March. Or retail space, people want to have a place to shop. But really, when you break it down into what's truly needed, industrial real estate, and you probably saw this in your market as well, is when there were stay-at-home orders and people were forced to be working at home, there were still essential businesses that were allowed to operate. And for the most part, industrial real estate kept chugging along because it is so imperative to getting things being made and then shipped to us, whether you buy it from a store or whether you just have it shipped to your door. It really is a necessary step, not just one that people would like to have. It's a necessary step in the supply chain.
Yeah, for sure it is. I know in our house we bought more stuff during the pandemic from Amazon than we usually do, right? And because there was and a lot of stuff, because it's getting more to that point now. I think that you're getting everything delivered, right? You don't go to the store anymore. I get my groceries delivered these days, because it's so much easier. I just make an order in the morning and then by the afternoon it's here, and we're developing into, I don't know, I don't want to say lazier, but lazy, you know what I mean? People these days. And I think that supply chain is so important to do that. And I think as you pointed out there, everything we touch is been to a warehouse somewhere at some point, and that's why it's such a great investment class, I think.
Yeah, and I would even equate it to like one that you're very familiar with on the multifamily side. There's that saying, beds and sheds have been very successful going back a long time, not even just through this past 18 months, but beds and sheds. So you're talking multifamily and industrial. Those have actually fared quite well. And there's a lot of commonality with that. And I think why industrial has been a success story as an asset class, at least compared to retail and an office, is the same reason that multifamily has done well, is because people need a place to live and people need a warehouse to conduct business. So I think that there's a lot of similarities between the two.
Yeah, absolutely. So, when you're looking at a deal, most people, they understand now what we're talking about. We're looking at industrial. Most people haven't looked at the numbers and try to figure out if it's a good deal for the most part on industrial, right? So how do you go about analyzing and then underwriting an industrial deal?
Yeah, great point. And I'm glad you did bring that up, because I did want to add to my last comment about there being similarities between residential and industrial. There are similarities, but there are also stark differences. And perhaps that's a good place to jump into on how to measure them, because I've said before that I think industrial real estate should actually scare people. And that's probably the opposite of what someone wants to hear if they're considering industrial real estate. But I really do think that having a healthy amount of fear can help someone out when they're entering into a new asset class. And there are pretty big differences with industrial, and it is a scary proposition for people that are inexperienced. But the flip side of that coin is that even though there might be some more uncertainty with it, there's also typically going to be much higher returns. Every market's going to be different, but in my market specifically, if you're looking at a residential property, you're probably in the 4% cap range, give or take, depending on the stabilized income and some other factors. But 4% is probably a safe bet. Whereas industrial, you're looking anywhere from 6.5 to 7.5%. So you're making a much higher return on an industrial property for taking on the additional risk. But anytime that there's additional risk, you also need to be cognizant of the potential downside. And I'm a big believer that protecting downside is as important as forecasting what the growth on it's going to be. So I'm a big advocate of that. Anytime you're investing in anything, and that's probably multifamily as well. I'm not a multifamily expert like you, Barry, but I suspect you're looking at the same thing when you're underwriting a potential opportunity. Is you're saying what can go wrong with this property, and then if everything goes right, here's how we're projecting our pro forma over a 5 or 10 year period. I think it's the same exercise going through it with industrial. Just the difference is that everybody has some familiarity with residential because we all live in a house. It's pretty obvious that if there's a house or an apartment that's compatible for one family, it's probably going to be compatible for another family. That's not the same in industrial. In fact, you could have one industrial property that was custom built for a specific type of company. And if that company were to leave, it could be very difficult and perhaps prohibitively expensive to retrofit it to make it adaptable for another tenant. So those are the types of things where you could have huge downside risk, much more so than residential, where I not to belabor the point, but an apartment unit is largely going to work for a number of different families, whereas it just won't in industrial. There are properties that will be compatible with numerous different companies, and those are the things that investors want to watch out for. And if it is a property that's going to require a lot of work, then that should all be reflected into the purchase price. And the inexperienced or investors that are rushing into it might overlook that. And I've just been down the road, whether it's clients, even one that I did myself, where I lost money on it for that exact same reason.
Yeah, and I've heard you say it on other podcasts. It's because you can have a property that works for one tenant, but then once that tenant's lease is over and everything is great while that tenant's in there, you're cash flowing and it's not many headaches, but then that tenant moves out and you've got to find someone that's especially if it's a little bit of a unique property, right? You've got to find someone that's the same as that tenant essentially to go in there, or you've got to spend a lot of money, and people don't have that foresight to maybe think that far ahead, and that cost to fix it up, or that the lowering of the sales amount is going to cost you and is going to hit you on the back end. And that's such a good point that you can get gung-ho sometimes in stuff and think, oh, this is a great investment, it makes sense. But I appreciate you saying, especially as a broker, right? You don't expect someone who's selling real estate to always to let you know about the downsides, but it's I think it's important to know. So when you are looking at a property, what, you know, you take into consideration, okay, what is the tenant now, you know, what happens if they leave in 2 or 3 years time, or even in 6 months time? What do we do with the property? What other considerations do you have when you're analyzing the deal?
Yeah, I will go into every single property, and I recommend my clients to do the same, is treat it if it were vacant. Because even if you had a 5-year lease in there, that 5 years comes and goes pretty quickly. And if you get stuck with a property that you can't release or sell, then you're going to have a problem. So I would say look at every single investment, specifically industrial real estate. It's different in other asset classes, but specifically industrial real estate. Treat it if it were vacant. And then you got to do an audit on what would that property actually attract in the open market. So if that property did go vacant, company goes bankrupt, or they leave and you've got to chase them in court or wherever it is, if that property does go vacant, who is the tenant that goes in there? And going through that exercise is actually pretty important, because you'll be forced to actually go and compare that to other industrial properties in the market. So let's say you have a 30,000 square foot industrial property, and you go and look at all the other 30,000 square foot properties that are out there. Well, what are some of the attributes of the building that are in comparable properties? So the number of loading doors, is it dock loading? Is it grade loading? What's the access for trucks to get in there? Is there enough room to bring in a 53 footer? Are the ceiling heights all pretty standard? That's probably one that's overlooked quite often, is just underestimating the value of ceiling heights. Modern buildings right now all seem to be built in that 28-foot clear or higher. So if you have a property that only has 18-foot ceiling heights, that can actually be a problem for a lot of tenants that are trying to rack a certain amount of space. So ceiling heights is a big one. How much power is coming to the building? How much office is in there? How much yard is on the space? It's really just doing a comparison, no different than someone looking at houses and saying, okay, well, this is a 3-bedroom house. I'm comparing it to other 3-bedroom houses. You're just comparing different things. And unless you know what to look for in those, like unless you know that the power coming to the space is actually a really important thing for tenants, you might just overlook it. So it comes down to really understanding what industrial real estate is. And the biggest thing that I try to drive home to other investors, and what I remind myself of, is that most real estate, and commercial real estate and industrial real estate specifically, is only worth some function of what tenants are going to be willing to pay for it. So if a tenant is only willing to pay X, then the property is worth some function of X. So you really need to be aware of what other properties are leasing for, what other properties are selling for, whether it's on a per square foot basis or just having a general sense of what the market sale price is. Then you can evaluate and audit how similar that property you might be considering is to the rest of the market. And that just takes time. There's really no easy way to do that other than to just be a student of the market and studying what types of properties are out there and seeing what's being offered and perhaps what your property does not have. Or there might be something that it does have that gives it a benefit. If none of the other properties have overhead cranes and the property you're looking at does have overhead cranes, that could be a benefit. So I think that, like, at step one, even if there's a tenant in the market, understand exactly how that property competes as if it were vacant to the rest of the inventory in the market.
Very interesting, very interesting. So then, and you talked a little bit about comparing different other properties in that market, right? But how do you compare it? Like in multifamily, right? You have 1 bedroom, 1 bath. Okay, what is other 1-bedroom baths that have similar vintage, have similar facilities, you know, similar amenities, and you're able to therefore compare that, right? But how do you compare to different properties? You know, obviously the cap rate comes into play, but in terms of, you know, because so many industrial, there's very rare that you have the same type of industrial building that's right next to each other, or a few of them. So how do you compare them?
Yeah, and that's a really, really valid point, because you're right. There's very few scenarios where you'll be able to directly compare apples to apples. But for the most part, a tenant in the market for a 30,000 square foot spot will probably consider some variance of how that property might look. Like if let's say it's a distribution company and they wanted 30,000 square feet, they're almost certainly going to need dock loading, because they're going to be having trailers come and go from it, and they need to have that dock loading height. So they're probably going to need to have that in there. The amount of office that they need might vary. The amount of power that they have might vary, but those are also all overcomable situations. If you need to add more office, you can do that. Where you can't change things or at least it's very difficult to do so, is you can't change the ceiling height. You can't change the doors in there very easy. You can always increase the ceiling height. You could always add more doors, but it becomes quite expensive, particularly trying to go from grade to dock or dock to grade is really difficult. So most companies, if they're in the market for 30,000 feet, they'll probably look at anything, call it 25 to 35,000. And there's only going to be a certain amount of properties that fit that criteria. So I would say that there's certain things that you just want to make sure that your property has, and ceiling heights is being one of them, what type of loading doors it has. And then anything that the property doesn't have, you at least want to have an idea that the cost to bring that up to what the rest of the market isn't going to bankrupt you. So that's a very good point, though. And I think that that's worth emphasizing, is that no two industrial properties are the same. So you're just trying to use your best judgment and your discretion when you're comparing what property you might be looking at to the rest of the market. And I think that also underscores the importance of just being an expert in the market. It's difficult for real estate investors to be really successful if they're not passionate about knowing everything that they can about the market. And that's what vacancies are coming up, what properties just leased, what tenants are in the market for this type of space. What are they looking for? What are their requirements? Have they sent out an RFP? And what does that RFP say? These are integral steps that an investor can take to better their chances of success. But doing it part-time or just hoping that things work themselves out is probably futile. I think having a plan and just being passionate about knowing everything you can about the market better equips you for long-term success.
Yeah, absolutely. It's just like everything, right? You can't be a generalist, right? You want to be a specialist and really understand that. And you talked about it there, the market, right? How important is picking the right market in industrial? I know in real estate it's massive, right? If you're looking for population growth, job diversity, and a number of other things, right? But those are the main things that you're looking for. In industrial, obviously those things don't matter the same, but they could. I don't know. How do you pick a market, and what are the important factors when trying to find a good market?
Yeah, awesome topic to dive into. And I think that there's going to be some subjectivity to it where everyone's might approach it differently. My personal philosophy is that I only want to invest in markets that I either live in or I know very well. And when I say know very well, that's going back to that original comment of I know all the inventory in the market. I know what spaces are available. I know what spaces just leased. I know what tenants are in the market. I know who the players are. That just takes time. That's really hard to do from behind a computer. Let's say I was going to consider London. I was going to look at London industrial real estate because I thought that was going to be the next play. That would take conceivably a year or two before I felt comfortable knowing everything about that market. And it'd be very difficult to do behind a computer. So I'm a big believer in only investing in markets that either I live in or I know very well. But there are companies, especially large institutional companies, whether it's a pension fund or a real estate investment trust, that they have a portfolio of properties all over the nation, or perhaps even the world. Like Prologis is a good example, largest industrial property owner in the world. They've got properties in all the major markets across the world. I think at last count, they had almost 1 billion square feet worth of inventory. That's a company that has boots on the ground and resources in all of these markets where they've invested a considerable amount of money gathering all that intelligence. But that's different from me and you. I can't just go and deploy a team to go to Chicago as an example and have 5 people work in that market exclusively. We just don't have the resources to put a team like that in place. So I think there's a spectrum. There's smaller investors that are just guys that want to own their own properties, up to perhaps like a syndicate where they try and raise money and invest in it. Excuse me, all the way up to like these large companies, which just have a lot more corporate infrastructure in place. So that's kind of my philosophy. And that all the investments that I own right now are directly in my market. And although our market hasn't done extraordinarily well, we're in an oil and gas market primarily. So we've been victim to the depressed oil prices for the last 6 or 7 years. It's still done well for us. And I know that I can drive to any of my investments in 15 minutes. So that's had a big impact.
Yeah, but that's a great point, and I think, like you said, being able to drive there, being able to be in that market and have all that knowledge is huge. But in terms of, someone trying to pick a market, maybe they're in a market that doesn't make sense and they're trying to find somewhere. What does it really matter? So, because obviously it really, a multifamily, it can really, you don't want to be in a bad market. If you're in a market that has declining population and, not much job diversity, really affect the thing. But in industrial, because let's take a warehouse, for example, does it really matter about the market as long as the roads going in and out are good? Like, how important is some of those things, or does it not really matter that it's in a booming metropolis or whatever?
Yeah, I love your probing on that, because that is a really good question to ask. I think everyone's going to have a different degree of comfort on how they would look at it. Perhaps a really good illustration on it would be like a small market. Like I'm sure in your area as well, you're going to have your major metropolitan area, and then you're going to have a whole lot of outlying markets. It might be like a 20,000 or 30,000 population. Those markets I would personally steer away from, just because if you have a property that comes vacant on the industrial side, it could take a long time to attract a tenant into it. But on the other end, if you're in a major city, I'd even say like somewhere like 1 million population or higher, as long as there's decent economic prospects for your city, I still would recommend people invest in their own city before they start going out and exploring other markets that they're not familiar with. Just because the learning curve of getting to know a market you're unfamiliar with as a small investor like you and I, it would just be very cumbersome. It'd be very time intensive to know. Where the corollary of that is that if you are looking in your own market, even if it's not as vibrant, and maybe we could actually use two markets. Maybe we could take like Minnesota, and then maybe we could take Los Angeles. So Los Angeles right now is booming for industrial real estate. Their greater LA area is about 2 billion square feet worth of industrial space, and their vacancy rate is sub 2%. Sorry, I don't know why I left my phone on. Sorry about that.
No, it's okay.
Hopefully it's not ringing too loud on that.
No, I didn't actually hear it, so it's all good.
I apologize for that.
No, okay.
And then compare that to Minnesota, it's an inland market, right? There's definitely not as much international appeal to owning industrial real estate in Minnesota versus LA. But if you are an investor in Minnesota, I would still think it'd be much better to invest in Minnesota than to try and learn a market like LA, where you're competing with some of the most sophisticated real estate investors in the whole world. So from that standpoint, that person that lives in Minnesota is just going to know Minnesota that much better. They're going to know all the roads. They're going to know all the major areas. They're going to know what their economy is like. They're going to read what the economic forecasts are. And even if the cap rate is different, let's say the cap rate in Minnesota is 8%, and let's say it's 5% in LA, that cap rate is already taken into account some risk. And that's just the fact that it's higher. So I still think that searching in your own market should be the first place that you start. And if there's reason to believe that there's going to be some economic decline, like maybe what people in Detroit would have been facing 20 years ago, maybe someone in Detroit would have said, I have capital, I don't feel comfortable investing in this market where I know that there's going to be trouble down the road, then perhaps they look somewhere in the area. Maybe Chicago makes sense for them. But that would only be after fully exhausting the possibility of investing in your own backyard. But again, that's just my personal philosophy. I know guys that have invested in other markets and they've done very, very well by it. I don't know if it's a combination of luck or they just did a lot of work behind the scenes. But there are guys that have done very well investing in other markets. Just comes down to personal comfort, risk, and strategy.
Yeah, absolutely. Well, thank you for elaborating on that question, on that answer. So I think it's a great point, and for a lot of people to take into consideration. But are you ready for the knockout round?
Absolutely.
Great. Well, what would your wrestling name be?
Well, as a fellow Griffiths, you could probably appreciate this one. I think I'd go with something where I could play into the role, like the grifter, where grifters are like guys that like sneak around and steal stuff. I think I would try to play into that role where I'd like go into the Rock's locker room and I'd steal something from him, and they'd be like, "Oh, that grifter, he got me again," and I'd try to build up the tension. I mean, I was a big wrestling fan when I was younger, so having that plot always seems to thicken the action for wrestling.
That's awesome. That's awesome. I like that grifter. I like that
The
a lot.
grifter.
Yeah. So every wrestler, as you know, being a wrestling fan, has a special move. What is your special move in real estate?
Yeah, that's a great question too. I think I would say closing the deal. I'm a big believer that you can spend a lot of time and effort in this business, only to get to the goal line and not be able to finish it off. So I pride myself, whether I'm just investing in my own money or whether I'm helping a client out. If you're going to be spending all that time and money in there, you got to close the deal at the end of the day. So I'd go with the closer as the signature move.
Yeah, that's so important. That's without closing, it doesn't mean anything, right? You can have all the deals in the world, but if you don't close, it doesn't mean anything. What's been the biggest body slam you've taken?
Well, yeah, actually talking about one earlier in the conversation, I had a property that I invested in 2015. Try to make it a long story short. It had a commercial grade cooler in it. And I thought that would actually be a really good benefit for the tenant that was leasing it off of us. I invested with a partner on that one. And we had them in there for 5 years. And when their lease was coming up, we were trying to get them to renew or buy it off of us. And they totally just called our bluff and didn't proceed on it. So we were left in the position where we were stuck with a spot that had a large commercial cooler and there were no washrooms, no office, nothing, which would have cost a considerable amount of money to build out. So we ended up selling it to them at a loss. We ended up taking about a 15% loss after owning it for 5 years. So yeah, that one hurt, but it reinforces that message that I adhere to myself and I tell other people is just make sure you fully understand what you're buying and that you know that downside risk.
Yeah, absolutely. So was there a moment that you were standing on the top rope, getting ready to jump, but you were too scared? What was it and how did you overcome it?
Yeah, I love all these questions coming from Mason Ryan too. It's just so awesome. I would say probably the biggest one that I had to overcome standing on that top rope was just starting a YouTube channel myself. I've had a successful career. I've done well. I've got a good brand in my specific market, and I was thinking starting a YouTube channel, if that would perhaps dilute my brand or come across as like cringy, or if people would make fun of me for doing it, or if they just wondered if I was wasting my time. And I'd wanted to do it for a long time, standing on those ropes, just wondering if I should jump with an elbow smash or whether I should just climb down. And I did. I jumped full on with the elbow smash, and it's been an interesting ride. I've been doing it for over a year now. But yeah, that was definitely one where I really struggled to get the courage to jump off the ropes.
Well, I'm glad you did. I, for one, really enjoy everything you put out there. I've been consuming a lot of your stuff, and it's really good. So I recommend anyone out there who has an interest in this to go check it out. And you do some great interviews as well. So I highly recommend it. So, and Matt, it's a perfect transition, I guess. So, if you want to let people know how can they find the YouTube channel? What's the channel called? If they want to get in touch with you, if they want to find out more about what you got going on, how can they do so?
Yeah, I think my channel is Chad Griffiths CRE is the handle on it. If you just search industrial real estate on YouTube, I'm probably one of the only ones that's doing it. I find it so fascinating how big this industry is, but how little good content is out there. So that was one of the reasons I was compelled to do it. It was just try to offer any knowledge that I had into the body of knowledge, and anyone that was interested. I try not to talk about myself or as little as possible, with the sole intent of just offering some value. So search either just my name or industrial real estate, and I'd love it if you checked out a video.
Perfect. And then if they want to get in touch with you, or if they want to find out if you got a website or anything like that as well, that they can get in touch with you.
Yeah, I'm pretty active on LinkedIn as well.
Okay.
So just if you search my name, or if you add it to the show notes, I could send you that link as well, Barry. Or email is griffithscre@gmail.com. Same spelling as your name.
Perfect. Well, we're going to wrap it up here, but we're going to continue in part 2. So that was an awesome first part. So we covered a lot of stuff, but as with anything that's new, there's so much to cover. So stay tuned for part 2. It's going to be an exciting one.
Awesome. Thanks again, Barry.